All right, hey guys. In the last video, we answered two big questions. The first one was, where are you financially? And that answer was the net worth statement. The net worth statement is the statement that tells you what your financial position is. The second one was what changed. This is where we looked at the personal income statement, at least um, we looked at it conceptually. And this is where we take income, which are economic value created, activities that create economic value, minus expenses, which are defined as activities that consume economic value. But now we hit a practical problem. How do we actually track all of this? We need a system, and that system starts with one thing: the chart of accounts. So the chart of accounts is a structured list of all the accounts you can use to record financial activity. You can think of it like a menu. Okay, every time you record a transaction, you're choosing from this menu, and we're going to create this so that it is like a menu where you select the transaction rather than having to type in different names and remember them all the time. So if the menu is messy, then your system's going to break. If there are missing items, then you can't record reality. And if it's too complex, you won't use it. So we have to balance all of these different items and make sure that it meets those criteria. So our goal today is to build a clean, practical chart of accounts that covers about 80% of real life transactions. Once you see how I go about doing it, you can custom tailor it for your own unique situation. So every account that's listed in this chart of accounts is going to be grouped into one of 5 different categories. You're going to have assets, liabilities. Okay, so just to make sure that we're on the same page, assets are things that you own. Liabilities are things that you owe. Equity is going to be essentially just your net worth. There's going to be revenue or income sources, and there's going to be expenses. So these connect directly to what we've learned so far. Asset, liabilities, and equity, which is a statement of your position, gives us your net worth, and revenue or income minus expenses gives you your change in net worth. So your chart of accounts must support both position and change. So let's build this together. I'll open up Excel because that's the way that we like to do things here. And I just got to make sure that I've got the right file open here. Bear with me. And here we go. Okay, so on the screen, we have our Excel document. And what we want to do first is we want to create headers. In column A, we're going to create an account number. So account, not typing there, account number. In column B, we want the account name, account name. And in column C, we want a category. Okay, so we want to structure the categories as follows. And I'm just going to write this legend on the side beside these columns so that we can keep track of how to organize this. So for numbers, count numbers, we have 1000s. Really, I should put 2000s. So 1000s, 2000s, 3000s, 4000s, and 5000s. Okay, the category that these ones are going to cover are assets. So essentially, any asset that we choose, that again is going to be unique, but I'll go through a couple of general ones for this demonstration. They're going to have an account number that begins with 1000. Okay, this will make sense when we start filling this in. For 2000s, we're going to have liabilities. For 3000s, we're going to have equity. For 4,000s, we're going to have, we'll call it income. And for 5,000s, we're going to have expenses. Okay, so every income account should begin with 4, and then the other 3 numbers are going to be based on how we want to classify them. Okay, so let's go through and add a couple of different accounts. So the first one that we want to add, and it's best if we keep these grouped in order. The first one that we want to add is cash. So cash is going to have the account number 1,000. It's going to be called cash, and the category here is an asset. The second asset that we might have is a checking account. We're going to call this 1,010, and we're just going to say checking, and I'll use the British spelling of checking, account. Okay, and again, an asset. Now, theoretically, if you had a couple of different checking accounts and you wanted to distinguish each of them, then you could say, let's use a bank. So, with a US focus, a JP Morgan checking account, you could have 1,011. You could have a Bank of America account, 1,012, and so on and so forth. So you want to keep these categorized cleanly according to whatever system it is that you choose. Okay, 1020, let's call this our savings account. Again, this is an asset. We're going to have 1,100 receivables, 1,200, which is our vehicle. And if you have multiple vehicles, maybe do 1,201, 1,202, etc. Asset. A home, we'll call 1,300. Asset. And investments. Asset. Okay. So again, if you have multiple accounts, then we use 1401 or 1410. Maybe you use 1410 to stipulate a specific company that your investments are with. And then maybe if it's a margin account or some sort of a registered account or whatever, you would alter the ones digit. But again, you'll know your system best, so classify it the way that you want. So those are the common ones for assets. And you want to get as general to be able to capture every transaction, but specific enough that suits your needs. Let's move on to some liabilities. So liabilities, we're going to start with number 2,000, which is a credit card. We'll just call this a liability. Okay, 2,100 is a personal loan. 2,200 is an auto loan. And 2,300 is a mortgage. Next, we want our equity account. We'll just name this one 3,000 or give it the number 3,000. And this is just going to be net worth. In a business context, you'd have multiple equity accounts, but in this case, we're just dealing with personal finance. So our net worth is all that there is. So equity. Next, for our revenue or our income, we would have 4,000, which is our salaries and wages. Salaries, wages, and we'll call this income. Okay, and again, if there's a couple of you, a couple different sources of salaries and wages, 4,001, 4,002, so on and so forth. And you can name these, say 4,001, Jeff's salary, 4,002, Jennifer's salary, okay? Next, we can move on to freelance income. And last 4,200 will be investment income. Okay. Now the question there for investment income is, what kind of investment income? Is it interest? Is it dividend? Is it, um, unrealized capital gains or unrealized capital losses? We can massage that a little bit, again, according to unique circumstances. Lastly, we have our expense accounts. So 5,000. This one's going to be rent or housing. And this is going to be an expense. 5,100 groceries expense. 5,200 utilities. 5,300 transportation. Okay. And transportation obviously is sort of a catch-all category or group. So you may have 5,300 as transportation as a general account, but 5,301 might be something related to transportation, car insurance, gasoline, etc. 5,600 will be dining out. And 5,700 subscriptions. Okay. So this is an example of the type of accounts you would find within a chart of accounts. And this right here is the chart of accounts. This covers the majority of everyday life, although you would want to sort of make this as unique for your own circumstances as possible. What you want to avoid is the following: mixing assets and expenses, creating too many accounts, and naming accounts inconsistently. So keep it simple. You can always expand or add different accounts for unique transactions later. Now, we want to talk about this next key idea. Every transaction, and we'll get into transaction analysis and journal entries in another video, every transaction pulls from this list. So for example, if you earn income, you're going to choose from the list income, okay, because that's gone up and you're going to enter the value. And then you're going to also choose cash, assuming that you've received cash during the time that you've earned that income. And you're going to add cash as well. If you pay rent, you're going to choose the rent expense, and then you're going to choose cash because cash has been affected. If you have no chart of accounts, then you really have no system. So that's why this is a critical video in developing your financial system. So now let's make this practical, and we're going to create a drop-down. So what we want to do is we want to highlight the account name column. And what we want to do is we just want to highlight all of the cells. I'm holding down Shift and Control, all of the cells that represent these accounts. Now right here in the name box, you can actually select this and just type in accounts and press enter. So that has now created a name for this set, okay? Now, if we go over to our journal entry tab, we're going to create the journal entry sheet. I've created it here. You can see the columns. They have date, description, debit account, credit account, and amount, okay? We're going to then add a drop-down list. So we want to select the debit account column. So debit account, and again, just select the second one here. You can hold down Shift, Control, and press down. That'll basically select every cell that's in column C. Then we want to go to data validation. We want to create a list. Okay, data validation list. And you have to type in equals and then the name of the list. So we named it accounts, and click apply. So what this does is it allows us, when we're entering transactions, to click the drop down and choose which of the accounts was affected. So for instance, if we received cash, we would choose cash, and that keeps everything clean and it avoids any typo errors with spaces or whatever the case may be. Okay, so we want to do that again for the credit account, because we could credit cash, we could debit cash. So again, hold down Shift, Control, down, data validation. We want a list, and we want the same set of lists. So accounts, apply. Okay, so then we can go back up to the top and just make sure that we can choose from any of these. Okay, which we can. Okay, so again, we're not going to get into the journal entries yet. There's a couple of pieces of information that you need before we do that, but that is essentially how we set up the chart of accounts. So you now have a structured chart of accounts, a system to select accounts, and we've built the sort of foundation for journal entries, which is arguably the most important, the most critical component of your financial system, because it drives basically everything else if you've got everything else set up properly. So this is where most people stop, but we're just getting started, because now we need to answer, how do we actually record transactions correctly? That's where we go next into what's called double entry bookkeeping, which is essentially how we operationalize this theoretical knowledge of assets and liabilities and equity and changes in our net worth with income and expenses. How do we bring it all together in a system? We're going to need double entry bookkeeping to do that. So we've built the menu. Now we need the rules for ordering. This video, it does something critical. It turns abstract accounting into a usable tool. So be sure to check out the next one, where we continue on in this process of developing this system that will help you manage your finances better. If this video has helped you, be sure to hit that like button, subscribe for new content, and I'll see you in the next video.